Canada's monthly gross domestic product rebounded from months of contraction, growing by 0.2% in July. Mining, manufacturing, wholesale trade boosted growth. Let's go to Pedro Antunes, chief economist at the Conference Board of Canada, to talk about this. Pedro, thanks for joining us today. There's a rebound in auto parts and vehicle manufacturing, higher exports there as well. What's your read on that, given the tariffs?
Well, I was a bit surprised, actually. If you look at the level of production that Statistics Canada reported today for July, we're back to where we were at the start of the year. So that's good news. I suspect there's, possibly an order being filled, something that's happened that's temporary, and we are going to see that sector continuing to suffer with the tariffs that are currently imposed. We know certainly on the labor front, we have seen job losses in that segment. But for now, at least a little bit of good news there.
Okay, mining, energy are doing well. Steel, of course, has been hard hit. Will the government initiatives, the support, give a much-needed boost to the industry anytime soon?
Yeah, it's hard to see, kind of major switch. I think the objective here is to try and find other markets for steel. But of course, with the U.S. tariffs, this is causing kind of a glut outside of the U.S. in steel. Prices are down. And so we're seeing essentially that industry, again, according to the data just released today, down about 25% from where we were at the beginning of the year. So that's a big hit to that sector. Aluminum, a little less so. Aluminum is down about 9%. But these are segments that are being affected by tariffs, and I think it's going to be a tough road to get them back anytime soon.
So real estate rental did well in July. Do you see the housing market then getting back on track?
Yeah, this is resale activity, I think mostly out west of Vancouver, perhaps in that market where we're seeing a bit of a pickup there. But this is real estate commissions, financial services segment. We're not seeing a whole lot of in terms of new residential construction. So the impact on the economy is limited, but we are seeing at least some signs there that the real estate market for existing homes at least is stabilizing.
Okay, so how much is it hurting us, would you say, not to have a new trade agreement in place with the U.S.?
Yeah, I think this is the challenge, short and long term, really. Until we do get a trade agreement settled, we're seeing this situation where uncertainty, reigns the day, both for households and for businesses. We're already seeing essentially jobs. We're seeing the effect on jobs. Certainly, we have not created any jobs since the start of the year. Investment is down. Private investment even outside of residential. I'm talking about here investment in productive capital. That is down. And that's not good news for our future productivity or production. And then on the consumer side, this is what's been holding up thus far. But over the first 2 quarters of the year, we have essentially seen households really drawing down their savings to maintain that consumer spending, those consumer spending growth. So looking ahead, this is challenging. Employment growth flat. Immigration is now down, so we're seeing stable population growth overall. So we're going to have a weak domestic sector going forward.
And there are new tariffs being introduced by Washington on pharmaceuticals and furniture. How much will those affect what Canada sends to the U.S.?
Yeah, I think this is just an ongoing challenge. It's just, I think the direct impact of tariffs, of course, on these specific industries we're going to see that. If you look at the aggregate, like the kind of overall effective tariff, that is just taking a look at customs duties versus overall imports, that's still fairly low because from a U.S. perspective on Canadian goods, the effective tariff is, probably around 2 or 3%. And that is because a lot of the goods are still going essentially under the CUSMA rules there. But the challenge is more so on the uncertainty created. Again, I come back to that. Business investment is a real issue for Canada. We're not competitive in terms of our tax policies, especially with what's happened in the U.S. most recently with the One Big Beautiful Bill. So we are, very concerned about the near term and even longer term prospects here.
Okay, so that feeds us into the next question, which is what more can Canada do? We know the Prime Minister wants to build a lot of infrastructure around energy as well, get to other markets there, but maybe tax policy needs to change?
Yeah, I think we're definitely doing the right thing, expediting the approval process for some major projects. I think that is definitely something we've been talking about for a long time. If we can get that panned out to more projects, that would be terrific. That's one of the big challenges for investment in Canada, especially on the resource side. The other one is tax policy, and I do think we need to review that. The One Big Beautiful Bill, I was just talking about it, that allows firms essentially to write off their capital investments. The accelerated depreciation that we talk about here in Canada, there in the U.S., they can write it all off in the first year of the investment. That is a huge advantage. Now, we don't want to be running deficits like they are in the U.S., but in the meantime, we need to find some solutions here. We need to find some wins that can help us, through these difficult, challenging times at competing with that very generous U.S. policy.
Pedro Antunes, good for you to join us, sir. Thanks for your time. Pedro is the chief economist at the Conference Board of Canada.